Our way of life has caught up with us, and we need to act. The history of sustainability has been a steep learning curve. As societies became richer, we began to understand our impact on the planet. Doing the right thing moved into everyday life and conversations. We became aware of how our actions affect the climate. Short-term thinking is one of the greatest challenges facing humanity. Climate change is not some future threat, but today's reality. Long-term thinking is the next frontier of leadership and investment. In many ways, we're still moving in the wrong direction. The circular economy shrank by 0.5% from 2018 to 2020. Global resilience will only be achieved once our actions include environmental and social goals. Timely action on current crises must be central to any business model and will open a myriad of economic opportunities.
Please welcome Annelies Kjaer, data futurist and founder, Kjaer Global. Please also welcome Nick Gowing, founder, Thinking the Unthinkable, and international broadcast journalist.
Welcome, everybody. We want to move forward at high speed with a temperature check on where things are at the moment. And Annelies is going to give us some data, then we'll pick it up with the panel. We've got 45 minutes, a lot to get in, and the planet is still warming. Annelies.
Thank you, Nick. When we gathered the evidence for the video and put it together with our team, it was really staggering that the crisis we face is really undeniable. Doing further research, updating the data panels just last night, we really got the clear message we need to act now. And in fact, David Attenborough was just in the news saying that yesterday. The other news was from last night that the UN emission gap report sort of had the headline, a thundering wake-up call regarding the future of the emission gap. So Guterres said that we really are looking at not just an emission gap, but also a leadership gap. Now, of course, while fear tends to paralyze us, I think inspiration should be there right now. Inspiration to positive, bold action, because that's what we need. We've heard already from the Kingdom quite a few inspiring kind of action towards really changing the world as we know it. But we really need to look no further than the pandemic to see how quickly, when we are in sort of fear or fight mode, that we just revert to old habits. In at least 18 of the world's biggest economies, the pandemic rescue packets were dominated by spending that had harmful impact on the environment. Some of the other data is really quite clear. 95% of people globally believe the international cooperation is critical to solving global crisis. Yet only 1 in 4 people believe that it would be possible to collaborate to change where we are at now. So really, the question is, how do we create a shared vision for action when trust in governments and media and business continue to decline? And last but not least, This lack of belief in the possibility of building a resilient future, I guess, is the most alarming news of the day. So really for change, we need equality, inclusion, and social sustainability, because that is really what will be integral to the success of getting the temperature down. Thank you.
Thanks, Annelies. We'll be back to you during the session. Let me just repeat what she said right at the end, this lack of belief in the possibility of building a resilient future, and that is alarming. Let me introduce the panelists. From the far side, Noel Quinn, who's Group Chief Executive of HSBC. You've had a good week, Noel. You've announced a 74% increase in profits, and also potentially a $2 billion share buyback. Yep. So welcome.
Thank you.
John Green, welcome. Chief Commercial Officer of 91, dual listed in London and Johannesburg. I'm tempted to say you're not the boy band from Kazakhstan, which is also 91. Julia Hoggett, welcome. Since April, the Chief Executive of the London Stock Exchange, but until then, and that's important for this discussion, you were Director of Market Oversight at the Financial Conduct Authority in the United Kingdom. So that's an important perspective to bring to this discussion. Then we have Akim Daouda, who's Chief Executive of the Gabonese Sovereign Wealth Fund. Welcome. And finally, Fahad AlSaif, welcome, who is now Head of Global Capital Finance at the Public Investment Fund. But right at the get-go, I'd like to ask each of you in 15 seconds, do you recognize what is being said out there about the lack of trust, that things can be done at the speed that is necessary? Because just to quote to you from that new GAP report, it's very clear that we have 8 years, according to the head of the United Nations Environment Programme, 8 years in which to claw back what is necessary to make sure that we stay probably within 1.5, but maybe within 2.7. Let me just go along the road literally in 15 seconds. First of all, your view from Saudi.
Serious challenge. Massive capital has to be deployed. How to raise this capital is the issue. The sense of urgency, as far as we believe, it is not there yet. There has to be collaboration, as the speech that we have received, across global institutions.
So there's a trust problem you recognize?
It's a trust problem in delivering rather than the intent is there.
All right, Akim, what's your view from Gabon?
We definitely have a trust issue there, because definitely we're not on track anymore for the 1.5-degree commitment. And there, we really need to have the parties to enforce and accelerate the collaboration between them. And a lot is expected from the Global North on that topic. A lot of commitment, a lot of promises have been made, but very little has been delivered.
Julia.
I understand the trust problem, and I think the scale of the problem is the reason for the trust problem. The other point that was made was the paralysis and the fear when something is such a big problem to solve. And I think one of the responsibilities on all of us is, as we do re-architect the financial system, we actually talk about it and explain it so that people can understand how that system is pivoting in service of the planet. And I think if you just talk about it as initiatives and don't talk about it in a way that resonates, that trust will not change. And that's one of our duties.
John.
I think there's a trust problem for sure, but I think more so there's a belief problem at the moment. This is an enormous challenge, an enormous task. And so investors are right to be questioning. The big challenge in our view is solving the emissions problem in developing countries. That's not getting enough attention, and without it getting the right attention, we won't meet this task or this challenge.
And Noel, what are your customers saying right around the world, more than 60 countries?
Well, I think there's a difference. There is a trust deficit amongst a number of commentators that are looking in on governments and corporates. But from the conversations I have with clients, I don't share that trust deficit. The conversations I'm having is there is a huge amount of detail underpinning the phrase transition into net zero. And I think if we're to overcome the public trust deficit or the lobby group trust deficit, we have to bring definition to that statement, transition into net zero. And then we have to deliver against that definition. So it's all about the detail, and we've got to go below that high-level phrase.
Agree.
All right, well, that's what Inga Anderson, the Executive Director of UNEP, has said in the last 24 hours. This is now a time-critical issue. And also Guterres, the UN Secretary General, said very clearly we're facing, quote, he said it before, but we are now facing a climate catastrophe, even if we hold to 1.5 degrees. So I'm putting that out there to show you that, partly because of Glasgow, we're moving very rapidly, and it's setting the context for what we want to discuss here about regulation and the temperature check and the way the financial services, the financial markets are moving in response to what is happening. Everyone on the platform has got experience in this. And I'd like to turn to Julia first, if I may. You're, after all, only 6 months in the job. But you were doing that job in London, which was essentially a global job as well, of overseeing where things are going. A quick audit, please. You say there's a problem of initiative-itis, as you put it. Yes. Far too many initiatives. But actually, do we need as many initiatives? Do we need more?
Yes, good question. So I don't think there are too many initiatives, because actually to transform the way we function, you need a lot of change and you need people to have commitments to do things. I've described this as initiative-itis because it also drowns out any sense of a real sense of where we're actually going and in service of what. To me, the run-up to COP has generated those initiatives. The 6 months after COP are probably some of the most critical 6 months we face, because that's where we turn those announcements into dedicated action that will change how we function. Now, I'm a former regulator, and I also run a stock exchange, so I fundamentally believe...
But it's still in your blood.
It is in my blood, I'm afraid. And so I believe in pipes and plumbing, and I think that they're absolutely critical to how you make markets change. And that is the key thing that I think we'll have to transition over the next 6 months.
Is there coordination between you and other stock exchanges
Yes.
of the kind that is needed?
I believe there is. I'm not certain it's widely understood, but under the United Nations Sustainable Stock Exchange Initiative, we are all collaborating to make sure that we're setting common standards and common approaches, because the most important thing is that all capital moves in service of this objective, and also those acting against this objective can't hide and still gain fundamental access to finance. And so that is the principle behind which we're collaborating.
Now, Fahad AlSaif, you described yourself to me as the plumber. So we just heard plumbing as well from the London Stock Exchange. Explain what you think is happening and the speed at which it is happening and the imperative which is out there.
I think with all of the promises that has been made, with good intentions to ensure that we are able to contain this issue that we are all facing in a time constraint, as mentioned, in several years. It's no more a niche market. If I, as an issuer or an investor, it's not an extra mile. It's becoming a norm and a prerequisite. That's one of the concerns that we have. Does the market actually behave that this is no more a niche and it's becoming a norm? Yep. The geographical imbalances. Yes, all of these initiatives are bypassing developing countries, but the developed countries are able to extract the capital raise and the capital deployment. How are we able to show that there is a balance globally that all of us collectively we are able to achieve? Standardization. How are we able to become inclusive without standardization? It's a channel, it's a plumbing system, as you mentioned. You put it somewhere, you have an output somewhere. There is a capital raise and a capital investment need. We have to make sure that the plumbing system does have the right standardization and it's no more an extra mile to be done.
And quickly, do you believe it's moving in the right direction at the right speed? Can there be more momentum, more acceleration, more speed?
I don't think there is an option. We have all of us collectively to make sure that we are setting the expectations and everybody is able to run with the same pace. What I worry about is the imbalances in the pace that we are all moving toward to. And hence, if I have an initiative that I wanted to raise capital, there has to be a standardization. Where should I deploy that capital? There are concerns of greenwashing. Am I correct? How can we make sure that we give the investor the complete confidence and credibility that this sector is becoming very well regularized? It's the absolute value versus the relative value. Which one comes before the other? Is the conventional still absolute and the ESG, green, whatever, is a relative value, or vice versa? That's what should be solving.
I can see John and Noel nodding. They'll come to you in a moment because, Akim, we just heard there the fear that your kind of countries, your developing countries, are being, quote, bypassed in all of this. Do you feel bypassed?
when it's put like the way it was just put, or the way the question was framed, it's always intriguing. I'm always amazed because this is a story where we can't be bypassed. The issue of climate change is something that concerns the whole of the humanity, right? And when we talk about emerging countries, or let's say Africa, and let's put it in the context of Africa right now. Africa only contributes 3% to the global manufacturing greenhouse gas emission, widely. Yet we still need 2 trillion to meet the net zero objective in the next 30 years. So when you look at this magnitude of numbers, we do realize that we need those partnerships to be in place because public funding alone will not be sufficient. And that's where I believe that a financial institution or sovereign wealth fund have a role to play there. And when it was mentioned earlier, talking about regulations as well, because sovereign wealth fund can be used as a conduit between those two factions, between the public sector and the private sector, and help countries craft policies that will make investment more conducive in their country.
Press your one thing. Give me just no more than a minute.
Yeah.
In your bio and in your CV and in the profile of you and your fund, you talk about creating sustainable financial assets. How do you do that in a developing country like Gabon?
Basically, we have challenges in terms of transforming our economies. We need energy, for instance. How do we use the revenues that we can generate from oil to build sustainable investments, such as hydrodam? And how do we attract foreign direct investment in the country? And that's what we do. For instance, we recently closed a transaction I mentioned to you earlier with Meridiam to build a hydrodam in the capital city of Gabon. And it's the first IPP in the country, and it will be saving 130,000 tons of CO2 every year. And the fact that we were able to attract an international partner in that transaction that helped us structure the transaction in the way that it was viable for our natural ecosystems and our biodiversity.
I should ask Julia before I go to John, and because actually you spent some time examining Africa, you're not just thinking about the London Stock Exchange, your quick reflection on that, given the enormity of the temperature check, which has got to be done right across the world, including in developing countries.
I think there are two conversations we need to have, which is the flow of capital into the transition that the climate as a whole needs to make, and the flow of capital between the global north and the global south. Now, the London Stock Exchange actually, as a market, has the most investment in Africa of almost any,
so
I think, of any stock exchange. But, well, we have a duty to, I think. But I also think that we can't disconnect those two conversations because this is a global problem that requires really to assess the fact that there's been an imbalance of capital flows between the global north and the global south. Now, there is, sorry, forgive me, there is a way of unlocking that, which is that, as we've talked about, in Gabon, it's one of the only countries that actually has a positive impact on the planet from a CO2 point of view. Now, the more we recognize the value of that contribution that economies can make, and actually it has a value within the way markets function, then the more actually the transition of capital between the north and south, I think, will change. And that is one of the things that has to be unlocked. It's one of the key focuses of COP. And I think it's one of those things where we'll know that the plumbing is really starting to work in the right direction.
All right, well, let's get a view from the consumers of the plumbing. John, and also, of course, Noel, you're creating one of the biggest plumbing systems around the world. But John, from your perspective as an asset manager and investor for the last 30 years, what's your reflection on the speed, the capability, the effectiveness, and the energy that's now entering the market?
So I think many of those I would have different answers to, but one's dependent on the other. I think the first thing to say is that the energy around this issue is enormous, absolutely enormous. We've seen
and productive.
Through these 2 days, we see it when I talk to clients every day. Probably 60% of my conversation is about what are you doing to decarbonize our portfolios? How are you thinking about transition? How are we going to meet our net zero goals? 60 to 70% of our discussions with clients. Energy is absolutely there. I think action in terms of real financing is not there. Climate Finance Initiative reported just 2 weeks ago said total spend on climate finance was $650 billion. against the targets we've heard over the last 2 days, 4 to 5 trillion, 657. Increase of only 13% year on year. So we're not getting there when it comes to
What's
finance.
missing?
I think tackling the developing economy problem. So of that 650 billion, only 150 spent in developing economies. Developing economies today account for more than 50% of carbon emitted. More than 50%. They will account for more than 90% of the growth. And they received less than 20% of the finance. And of that, the most of it came from banks. Very little of it came from private finance outside of the banking system. And I think there are problems in the way in which long-term capital is thinking about portfolio-level metrics that is working against financial investment behind this problem. We have to change that.
We're going to go to Annalisa again for another data shot. But Noel, pick up, because earlier this year, you were involved in an FII gathering like this, and you made a point of actually saying that you personally are going through a transition and have been going through a transition in your 2 years as a global chief executive. And that's been important for driving the way HSBC is moving forward globally. Just reflect on the plumbing system, the developing world, and how you see this now moving.
Well, Nick, fundamentally, I'm an optimist, but I base that optimism at the moment on climate, on the conversations I'm having with my own customers, with governments. And I believe the acceleration on this initiative is really, really fast. And I think COVID has had an impact on that. I think COVID was the wake-up call for a lot of us to say a natural event can have a devastating effect on the global economy. And therefore, I think it has mobilized people behind the urgency of the climate challenges we face. So that's one thing. So I believe acceleration is taking place. And I think this conference this week is evidence of that. But I also see that at a detailed level in the conversations I have with clients. Now, how do you accelerate it even further? I'm also a realist. Much of this technological innovation will require significant capital investment to scale it. That capital investment can't be fully funded out of public sector alone. It has to be funded out of public and private on a blended finance basis. To really bring private sector finance into many of these projects, there has to be clarity about what those projects are trying to achieve. There is one other challenge that we all face. You know, if you've got a single purpose vehicle and it houses a project that is clearly green, it's relatively easy to get funding into that project. If you have an existing industrial corporate company, and that today is a mixture of portfolios, some of which are green and some of which are brown, there is a temptation for the world to say that's a bad corporate and this single purpose vehicle is a good corporate. And that's not realistic, because what we need to do is to put the finance behind those companies that are going to transition. We need to help those companies transition off their current technology base onto the new technology base. And we, the financial services sector, whether it's equity or debt, on balance sheet for banks or in capital markets, have to get comfortable transitioning corporates from where they are to where they need to be. And there's a significant amount of external commentary that is not accepting of that, and we have to ride through it. Yep. And that's what I've been working on with the task force of 11 banks, to try and bring definition for all of the industrial base of the world, not just the SPVs of the world that are truly green, to help them keep the finance necessary for them to fund the transition from today's technology to tomorrow's.
And what's your progress report? You're a leading figure in GFANs, for example.
Yeah, and we published a report last week. I'm not the best marketeer in the world, so we called it the Practitioner's Guide. It's for 11 banks that represented different parts of the world. And we said that if, as a bank, you use the phrase, we transition into net zero, then you put in place this architecture of definition, of disclosure, of measurement, of target setting. It should be science-based. We published that last week. We think that's an important statement for the banking sector to make, to say transitioning to net zero is not a marketing line. it means the following. And measure us against that, and we are committed to transition. We do not believe in withdrawal. Now, I think we need that at every level of company existence, that level of definition of what transition to net zero means. I think we need that at governmental level. The devil's in the detail, and if you've got the detail, you can attract the finance and you can defend your position.
Yeah,
Let's pick up on the issue of fresh thinking. Annalisa, you've got some thoughts and the data on fresh thinking that's needed everywhere.
Absolute. I mean, the writing is on the wall. And as we've heard from the panel, business as usual is just no longer an option. I see that those leaders with the right approach, they will see these challenges we face as an opportunity to invest in the greater good of humanity. I really like the proverb that says, when the wind of change rises, you have two options. You can either build walls or you can build windmills. And obviously, being Nordic, I believe that we should harvest the wind of change. Investors are already benefiting from green investments, and it is a trend that is only accelerating. In the data, really, asset management with focus on ESG impact could climb to 53 trillion by 2025. So we all need to work actively to solve our global challenges. It's really about collaboration, everyone around the table, to understand how we can invest in new business models and new ways of thinking, getting everyone to contribute. So we can't really wait. The future is circular. Linear thinking is yesterday. We cannot continue down that trajectory. 19% of the world economy will have to be circular to close the emission gap by 2032. But unfortunately, over the last 2 years, we've seen the circular economy go back by 0.5%. So it's time for fresh thinking, and we can foster resilient economies if we prepare to invest in the future today that we wish to have tomorrow. Thank you.
Thanks, Annalisa. And it's interesting and important that Antonio Guterres, the UN Secretary General, yesterday said on the emissions gap report, he talked about it as signaling, quote, a climate catastrophe, but he also said there are some hopeful signs in this report. But he did go on to say the emissions gap is the result of a leadership gap. Here we have leaders. How are you changing the way you operate internally to change mindsets, to change culture, so that you can sit here on a platform, but actually right down through the organization, there's a sense of rethinking. We've heard it from what's been going on here in the last 3 days with the enormous initiative you've been taking, but that requires change as well in your ministries and change in offices like yours.
For the past 10 days, what we were talking about is the risk and how to mitigate it. And hence, I will use Noel's quote, commitment to transition. Kingdom of Saudi Arabia have set targets top down on net zero economy by 2060, and all of the achievements that we wanted to, all of the KPIs that we wanted to achieve and how to achieve them in the coming 10 to the coming 20 years. PIF as a sovereign wealth fund, it's at the upstream layer of pushing and leading the change. The energy mix strategy of the kingdom, 50% of it is renewable energy. 70% of that is on PIF to deliver between now and 2030. We are keen and eager to spearhead raising the bar in the region. And hence all of the initiatives that we are doing, starting from renewable energy to social change to governance and best practices to be applied. In fact, the capital deployment does have guidelines toward ESG factors. The capital raising as well is to prove that we are setting the benchmark higher. It has to be to the best standards globally when it comes to ESG standards.
But this is about a massive change, and the work we're doing in Thinking the Unthinkable is that the trouble is the way people are qualified for their jobs disqualifies them in many ways from appreciating the scale of the change that's needed. And I think it's fair to say that at the first FII 5 years ago, I wouldn't say that the kind of discussions we're having here were in any way top of the agenda. So this requires a significant change of thinking.
Indeed, who would assume 2 years ago we were having this discussion just before the panel? It was, as I said, it was an extra mile, something to be given as a headline, rather than today, you are mandated to lead. Hence, a lot of intellectual, organizational capacities, standards, processes has to be applied for you to ensure that you have the norm to be applied by others. Setting the standards for all of the private sector in the kingdom, it is something that we feel that we are obliged to deliver.
Julia, you're, after all, running quite a traditional organization, or what has been, with a lot of traditional mindset and thinking. And I can imagine you've had some interesting conversations in the last 6 months. Where would you say the challenge is? Because we are talking about a temperature check, and that's actually about a temperature of your staff as well, to make them think in a different and sustainable way. Not about immediate profits tomorrow, let's turn a fast buck, but how that investment is going to be sustainable as well.
Interestingly, actually, coming to the London Stock Exchange Group was partly because of the sustainability history it already had when I arrived. So quite a lot of my colleagues had already got the point a long time ago. We are a very old institution, but we live in today and we set ourselves up for tomorrow, so we have to be thinking that way. The key challenge I've set my staff, and they have, I think, got sick of the phrase, is how we turn ESG into BAU. If you think about the way markets are structured right now...
Do they all understand it, do you think?
They do, but I'll explain what that means. So one of the challenges is that at the moment, a lot of our financing vehicles for green, and Noel's describing exactly this issue, are segmented. They're bifurcated flows of capital, which don't reflect the total flows of capital that take place in the market as a whole. They only sort of talk to one part of it. And it also makes a very binary discussion because it doesn't accommodate the transition financing discussion, it just accommodates the green economy discussion. What we're seeking to do is take those massive segments that we've built and led on, but to transition to thinking about how you actually cover the entirety of the activity that takes place across the London Stock Exchange. And so even last week, we invested in, with the Transition Pathway Initiative, some work with the London School of Economics in order to increase the coverage of the securities from 400 to 10,000, and that includes fixed income as well as companies. And that is part of enabling investors to think in any part of the investment chain that they make, how they understand the climate impact. And so the hardest challenge I've had is to work with these colleagues who've worked so tirelessly to create these segments, to say, I love what you've done, but we're going to start unpacking them and turning this into how we operate as BAU over the course of the next few years. But there is no debate about that direction of travel at all.
Can it be done at the speed and with the intensity that is clearly required in order to meet greenhouse gas emission targets?
I think the architecting piece, actually with the intent and the policy framework that we have in the UK and the globalised intent that we see through the UNSSE, yes, we can make those changes. I think one of the things I've thought about in terms of COVID is I described it as the fierce urgency of now that COVID generated for all of us. We had a common enemy, and the transitions that actually happened, notwithstanding some of the government investment, the change that we all made in a very short space of time was remarkable. We need to harness that same fierce urgency coming out of COVID into this climate crisis, and that's our duty to do so. And we have to put that pressure on our people to make those changes too. Akim,
so your redefinition, you come from, if you like, the other end of the spectrum, but moving very fast for resilient new thinking. How do you impose that, and how do you create it in a country like Gabon?
Thank you, Nick. What is quite interesting is Gabon, although being an oil-producing country, we have been having sustainable development in our DNA. Why am I saying that? We have 87% of our territory covered by forest. And this didn't just happen by miracle. It's really because our forefathers have been intentional in preserving that natural heritage for the Gabonese future generation and for the rest of the planet today, right? But what happened is, I was mentioning it earlier when we were talking about the fact that Gabon today emits around 20 million tons of carbons per year. And our forests absorb around 140 million tons. So basically, we're a net absorber of over 100 million tons. Now, the question and the challenge is, do we have a market for that carbon? Mm-hmm. How do we create an economically viable pathway for those carbons credits so that we can have the massive amount that are required to meet our challenges in terms of creating jobs for our youth, our economies are under pressure. So those are really the conversation we need to have with all the parties to say that, okay, how do we build this sustainable platform that will benefit the whole of the humanity?
And do you have access to the skills you need for that kind of transition, which has got to be significantly speeded up?
Exactly. And that's why we are on this type of platform, because if it's only the transition of our country, that we can do. And that's why we have the Sovereign Wealth Fund doing partnerships, talking to partners such as PIF to see how we can finance our transition, even our energy mix transition, moving from a country that has been exporting raw material to a country that is exporting now finished goods, right? But we need to scale up the conversation, and we need to speed it up, because time is not for half-hearted measures anymore. We need really concrete actions.
John and Noel, the change in mindset, the change in thinking as well. I mean, I remember at the Green Horizon Summit in London 2 years ago, it being very clear that there was a significant legacy within the finance business, which was, we don't really need to do green yet. Yeah. Do you think that has changed significantly?
Nick, absolutely it's changed, but I think there's a bigger challenge. I mean, the investment industry has spent the last 10 years sort of reducing and simplifying the way it does things, using data to find insights. Data is inherently backward-looking. The problem we have here is a forward-looking, judgmental problem. And so we're spending time reskilling our teams, thinking about how do you genuinely understand transition in a company. It's not a single portfolio measure. The approach that is really coursing through the veins of the investment industry is manage this problem by numbers. You can't manage this problem by numbers. We have to change that. It's back to fundamental good analysis of transition plans, of transition pathways, and how to back that process. Massive change for the investment industry.
But you know what's happening. There are those who are the opportunists in your business who are saying, let's make some money out of legacy assets which are being offloaded. We can make a quick buck there.
Yes, and I mean, even the data here says 58 trillion is going to be run in ESG portfolios. 3/4 of that is by numbers. That doesn't address the problem that we have to address, which is a sensible and well-financed transition. If we don't address that, we're not going to achieve this. And that's the challenge that the investment industry now faces. We have to turn, on our heads, back from passive and managed by numbers to real good
Is there a will to
fundamental
do that?
analysis.
Is there a will to do that, do you believe?
I think there is, yes. We've just spent an enormous amount of time sending our entire investment team to Imperial College to learn about how to think about transition. When Noel's team comes to our team and says we have a transition opportunity, they understand that properly. And so we just need the backing of asset owners to understand that that's the way they need to deploy their capital, and that's beginning to happen. It has to scale up massively, and it is a challenge, but there's a lot happening.
Annalise, let me invite you up for your third intervention, but I want to go to Noel first, because you've talked openly as well, Noel, about the impact that the COVID has on the work mentality within HSBC, an enormous bank. What are you seeing internally about the temperature and how you're changing your own mindsets, right from you at the top level in Canary Wharf, right across Hong Kong, through 60+ nations? Are you creating a new cultural mindset to make sure that green and this kind of opportunity is at the center of your business opportunities?
Yeah, firstly, let me reflect on the last 18 months. 220,000 colleagues in 60 countries around the world. 90% of them were working from home for the past 18 months. And they kept a global institution operating, not just operating, but operating well. And all credit to them, they did a phenomenal job. We placed a huge amount of trust in them, and they delivered. Now, I said to them earlier this year, we've been around for 156 years as an institution. We've seen the industrial and commercial landscape of the world change dramatically in that history. And we're about to see the next radical transformation of the industrial landscape of the world. Unfortunately, it's got to happen in the next 5 to 10 years. Now, I want 220,000 people in 60 countries around the world mobilized on that, the way they were mobilized in the last 18 months. And actually, of all of the emails I got last year in all of the challenges and issues we were dealing with, that was the single biggest issue where I got feedback from our colleagues, and it was hugely positive. They're up for it. But we also know that we've got to re-educate ourselves. I'm learning, I'm not a scientist. I don't know carbon capture technology. I don't know hydrogen. I've got to learn, and I'm learning, and our colleagues have got to learn. So I've got a cultural change program running at the moment where we're trying to raise the knowledge base of our people so that they're better able to assess the innovative projects that are going to come across their desk. They've been used to banking traditional business models. They know the cash flows, they know the technology, it's understandable, and now they've got to look at new business models and new technologies that are unproven, and they've got to work out new financing methodologies, and they've got to do that globally, cross-border. And that's a huge training and cultural change program, but we've all got to go through that. PIF are doing it, we're all doing it, John's doing it.
That's an important message for everyone out there.
Yeah. But I'm not saying it just because I'm here, but the energy level in this room and in this conference center over the past few days, I got here Saturday, is huge. You can feel the commitment, you can feel the creativity, and you can feel the innovation. We've all got to get behind it, and if you get behind it, it can happen. The scientists did an amazing job last year, amazing. We all thought it would take 2 to 3 years to get a vaccine. The scientists did an amazing job, they did it in 12 months. We've got to create that same environment behind this. Now, unfortunately, the execution of that vaccine has not been as positive an experience in all markets of the world as the creation of the vaccine. And what we've got to do is mix public sector, private sector, execution capability to harness the technology and the innovation that's taking place on climate.
That's a big challenge. Bill Gates says, of course, we had a vaccine for COVID, but we haven't got a vaccine for the climate emergency. Annalisa, we've got 5 minutes to run, so just put something else on our agenda for the last 5 minutes on resilience. Microphone, please.
Okay, absolutely. Thank you, Nick. So much to say, so little time, but I would say, as the panel focused on, fast transition is needed, and really lifelong learning is key here. We need to continuously learn about how we can do things better, and for that we really need a whole new mindset. We heard earlier about the 3 Ps, but in my book, really the 4P bottom line is the best way to sort of frame it, because the principles are so simple. Once we balance people and planet with a purposeful, eases to match, then again we feed into our environment rather than just feeding off it. And that is really the key to ensure long-term prosperity. The data is there. Half of the world's GDP depend on nature, and between now and 2030, the restoration of 350 million hectares of degraded ecosystem could mean that we would get a 9 trillion return in ecosystem services. So really, regeneration is a key opportunity for economic growth. And also, I would say that it's also key when we think about investing in humanity. It's key to the resilience of people and our planet, but it requires us to really reimagine business as usual. Because as people, we need to understand that we have to reconnect not just to nature, but our own nature and the really natural processes that nourish and sustain us. And my question really is, what innovations could we do today? What investment could we do so we can all prosper, not just in 100 years into the future? Imagine 1,000 years into the future. Thank you, Nick. Thank you to the panel.
I'd like to put to you that this has been remarkably rapid in terms of the adoption since the Dasgupta report, which was literally 6 months ago, saying that nature and the role of nature in economic activity has simply been ignored. There's been a massive change. I'm going to be running a nature newsroom at COP next week in Glasgow. What's your assessment? We've only got 5 minutes to run, about the new role of nature, the fact that most economic activity up to now has ignored the impact it's having on nature. That's a massive mindset. What's the view here in Saudi?
Let me take it a step backwards. We do have the principles of social developmental goals that everybody actually nowadays go through them and try to comprehend them and understand them. What are we planning to do in the kingdom is to ensure there is affordable energy, commitment to climate change, and also affordable communities and cities. This is all summed up by all of the initiatives that the kingdom is taking, more precisely the Public Investment Fund, the NEOM, the Red Sea, the renewable sector energy, the 2060 zero emission carbon target, the 278 million tons of carbon emissions reduction that we are actually aspiring to as a KPI by 2030. Kingdom of Saudi Arabia is playing a major role to ensure that we are able to collaborate and to ensure that we are able to set the new benchmarks.
But that's going to be a massive change.
Indeed, and we are willing to take that challenge. The intent is there, the capacity is there, the trajectory is there, and we have all what we have to prove that we are able to progress. I don't mind not achieving the target, but I would be very shameful if I'm not able, if I have taken dramatic decisions by taking U-turns.
Julia, what's your view? Are you seeing a dramatic recognition within those who trade with you and on the stock exchange that there's been a massive neglect of nature and there has to be an enormous change of thinking?
Yes, I am. So the first thing is, I describe it as we're living in a Moore's law of acronyms at the moment, because not only do we have financial services acronyms, we now have climate change acronyms as well. And we have the Task Force on Climate-Related Financial Disclosure, which is already embedded in premium-listed companies
TCFD.
in the UK. Sorry, Noel. But actually, there's the same discussion for TCND, for nature disclosures. And one of the fascinating things is this is a world where finance and physics need to meet, and indeed finance and biology need to meet. And increasingly, you can identify how much any production is dependent on nature and a natural ecosystem. There is far more information out there than has been clashed together in the past. And my sense is that that is exactly the next conversation where TCND will be as important as TCFD, and we will be making that transition. And that has happened in a short space of time, but I don't feel it meeting any resistance. I feel it meeting right, that's the next challenge we have to hit, but no more than that.
Okay, right. And John, quickly, the idea that green also includes nature.
Mm-hmm. Yes, I think nature has a massive role to play coming from Africa. We know that, but you have to find a way to put a value on the benefit that nature brings. And Bill was talking this morning about voluntary carbon credits. I think that's definitely part of the solution, but all of the companies we deal with, we're asking them that question. How are you thinking about your impact on nature? So it will change.
Akim, and your perspective from Gabon.
Obviously, you mentioned it, the natural negative impact of climate change of nature for us is something that we're aware of, in the sense that we know that today Gabon is based in the Congo Basin, which represents 10% of the world biodiversity. Should that Congo Basin disappear, that will have an impact all the way to Egypt, right? So that's why in Gabon, even in terms of energy transition, we're moving to a mix of 50-50 renewable energy to fossil fuel, to 80% of our energy coming from renewable energy and 20% coming from natural gas. We're also launching initiatives at the sovereign level to develop cross-laminated timber solutions. So we're building the first tower made of cross-laminated timber. We're not naive. We do know that a transition from concrete and steel to cross-laminated timber will not happen overnight, but we do believe that it will take an investor, two investors, or three investors to take the bets and set the trends, and hopefully our peers will follow.
No, last word, because you're dealing with customers. Customers want to make a profit, one way or the other, whether they're small, medium, or large. But they also need to understand the environment in which they are operating and which they can flourish in future. How much are your staff meeting customers, emphasizing these new realities we've been talking about? A minute.
This conversation is part of pretty much every dialogue that's taking place between relationship managers and clients at the moment. This is not new. This is center to everything they're having dialogue around. And on nature, I just got one thing to say on that. It absolutely has to be part of the mix. The clue's in net zero, it has to be. But the real challenge on nature it has to be a global solution, because capital in one part of the world needs to find a project in another part of the world. And the people looking at us all, the lobbyists and the NGOs and everyone, needs to understand there has to be capital flow from one part of the world to the nature-based solutions in another part of the world, and that there is a valid role for that, and it's part of the solution. And offset, therefore, sometimes is a word that creates a negative reaction. It's a reality when it comes to nature. And we have to find a means to transmit capital from the developed to the developing with legitimacy and with acceptability, because that is part of the equation.
No, thank you very much indeed, and thank you all. I've got to stop, I'm being told. We're running over time, but that was a very rich 45 minutes, so thank you very much. We hope we've given you a temperature check. The temperature hasn't gone up in this room, but actually the warning is out there that we're heading for 2.7 degrees. So thank you all very much indeed. I have to say we're continuing this discussion with some other guests at 2 o'clock across in the ballroom of the Ritz-Carlton Hotel. So please come there, including one of your senior sustainability managers. So welcome, HSBC. So thank you very much indeed.